Okay, welcome everybody to this evening's AUDJPY Securities webinar. My name is Duncan Cooper. Tonight's webinar is Forex Trade and Live Market Analysis. To give you a heads up about what's coming from me this week, tomorrow evening I have a webinar on order blocks. That's part 2 of our Smart Money Concepts Introduction 2. And then on Thursday, more live analysis. So tomorrow evening, 7 p.m. and then Thursday, 7 p.m. more webinars coming up. If you want to join me, just register your interest at our webinar page. Good evening to you, MD. All right, before we get into it, if you could read through the disclaimer. For those on the YouTube live stream, I can't see the chat, but I'll give you a link to join us in the webinar if you want to chat to me. For those in the webinar, I've got the webinar chat box and Q&A box open. You can use either to talk to me. So let's take a moment or two to read through the disclaimer before we move along. All right, we'll move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at AUDJPY Securities. And I've been trading the Forex market now for nearly 20 years, mentoring for more than 10. If you want to contact me, then you can get me on the email on screen, duncan.cooper@acy.com. If you want to connect with me through the week, hit our website, acy.com, go to the Market News tab, at our YouTube channel at AUDJPY Securities Australia, or you can head over to my Linktree page and you'll get me there and my links. If you want to get access to the charts that I'm using for MT4, just contact nathan.bray's emails on screen. For those in the webinar, I'll put his details in the chat. I'll be too happy to set you up. There we go. Just make sure I got that right. There we go. All right, so let's first up get to the news. Not sure whether the market's been really reacting quite properly to the news. I just want to go back to last week a moment because I just want to refresh my memory. Now, on Thursday, the news came out from the US of retail sales and unemployment claims, and they were all better than printed. Yet the US dollar still sold off. Didn't make a lot of sense to me. And ever since, we've been selling off since then. So, the markets, if you're trying to follow the news at the moment and taking the lead from what's coming out, it's not necessarily telling you what's going on. However, we may be, very much at the top of the range at the moment. Pairs to the US dollar moving up. So do have some headline news items coming out. If I can get back to the new week. All right, this is this week. So later in the day for Canadian crosses, Canada, 10:30 p.m. my time. So it's Queensland time, New South Wales time. We have CPI month to month, median CPI year on year, trim CPI year on year for Canada. So CPI is coming down. I'm sure into range here. We've been having interest rate cuts on the Canada side of, the equation. If you're talking about the US dollar Canadian cross, Canada's been cutting, US hasn't. We are moving down at the moment on the dollar CAD. So, we could put a bottom in today. Like down at the bottom of the range when we get to the charts, you'll probably hopefully see that. We'll have to wait and see. All right, so getting into, that's today evening, getting into Thursday early in the morning, 4 a.m. my time, we have the US FOMC meeting minutes. I don't know if that's really going to tell us anything other than what we already know. There's probably going to be a rate cut in September. Although I have seen some people thinking that we're not going to. So I guess we won't know until we get to the meeting. All right, so through Thursday, we have the flash manufacturing and flash service PMI data releases for France, Germany, the Eurozone, UK, and the US. So from 5:15, 5:30, then 6:30 p.m., and then 11:45 p.m. Those are times to watch for those different regions. 10:30 p.m. as well for the US, we have unemployment claims. Now, these data can definitely drive the market, so I don't think they're just items that you can dismiss. If they don't come out and print, they can definitely drive the market. And then getting into Friday, Again, from Canada at 10:30 p.m., we have core retail sales. Retail sales into Saturday morning. Fed Chair Powell speaks. I believe that's at the Jackson Hole Symposium. And I'm sure the market's wanting to hear that maybe they're going to cut interest rates, or, they want to hear something from the Fed, maybe suggesting that or not. So something that he says could definitely drive the market there, okay, into Saturday morning. And 1 o'clock in the morning, Bank of England Governor Bay speaks. And of course, day 2, Jackson Hole Symposium. Market will probably be shut by then. But so, come the start of next week, if something's got said when the market's closed, it might gap up or down. All right. So definitely items that can drive the market this week. So be aware when they're coming out. So today, for Canadian crosses, CPI data coming out. All right, let's get to the charts now. Forget my drawing tool in on the dollar index here. We actually put in a higher bottom last week. And that was up Wednesday here. And then, we went the opposite way on the Thursday news, which was positive. Oh, so I should correct myself. Let me just count these days back. Tuesday, Monday, Friday, Thursday. So Thursday we actually went up, but we went down Friday, Monday, and broke that higher bottom. So I was thinking we're getting support here at the 79% level of this range that I've got drawn in, but at the moment we have just sneaked through yesterday. Now we could end up with a false break in this area. This is the December low that we put in. And on the pairs, the US dollar pairs are heading directionally towards their December highs. All right, so it's worth just understanding where the December highs are on the pairs to the US dollar, or vice versa if it's US dollar to a currency. So you have a reference point. Not sure whether we're going to actually trade down there. We'll have to wait and see what happens this week. The whole idea of the US cutting interest rates in September, look, it's just one cut. I don't entirely understand why we're getting so weak, because other countries are also cutting their interest rates. So every other country at the moment is lower than the US. If you don't know that and you want to know what the interest rates are, if you go to Forex Factory, I just get back to if you go to up here on the news tab, then here it tells you what the interest rates are. So the US is the highest one at the moment. So just one rate cut of 25 base points just gets it back to equal with the New Zealand. Likes the Eurozone at 4.25%. So if we get one cut from the US, we're still a whole 1% below. Sorry, we're still a whole 1% above the Eurozone, almost 1% above the Aussie. So from an interest rate differential, all these other countries are lower. They're all lower at the moment. So we'll just have to wait and see if this is a true change in trend, or we're just getting to the what I would say the outskirts of where we load at the end of the year, December. And this could be a significant buying area. We'll have to wait and see. At the moment, of course, we can all see that price is moving down, so we don't want to be jumping the gun of a reversal, but I think we need to understand where we're at within the range of what price has been doing since the low got put in December. All right. So let's get into the S&P 500. All stock indices have been moving up. On this monthly range that I've got drawn in here, this is the monthly chart with the fib drawn in. We did get support from the 79% level area. 62, 79% area, back to the day chart. And we did put in a higher bottom here, and then we've been up. One negative day on the close, but pretty strong. So I would be watching. We might get a slight dip. We haven't had a day down for a long time. 1, 2, 3, 4, 5, 6, 7, 8, 9th day. So we should expect at some point, do you want to buy it on the 9th day up? Probably not. But we may only have one day down, and we're broken above this area of resistance at 55.63. I think it was, I don't remember what the fraction was. 89. I always like to put the exact numbers in. So I'd, if I wanted to trade up on the S&P 500 at such high levels, I would want to see a pullback to support, to be support. So 55.63 is the key level of support now, potentially. So I'd want to see some form of pullback to there to hold. To then, are we going to attack the high, the all-time high once more? Are we moving to a new high at the moment? All right, getting into euro dollar now. I just want to go to the day chart. And last week, when we did fail at the 110 area, but the actual swing trends was in an uptrend because we've, been going up, down. That was the higher bottom. Okay, because we pretty much failed at 110. Came above 110, then failed. We've got support then from here to put in a higher bottom. It's also a 62% level. So what I wanted to get across to everybody is we can all see prices moving up, but there's a time to get in to the long side, and then there's a time to take your profits on your longs, because we are now at almost at the 127, which is at 110.92 to the nearest pip. Now 110.95 is a weekly resistance level from the weekly chart over here. So this fib tool target comes in line with a really good resistance level, where it might not end the overall move up long term, but I would expect that this could potentially then move back down, maybe to retest 110. And then what happens at 110? So in this market at the moment, we're in the profit taking area. So it's not where I would want to buy, but we could still have a bullish bias if we wanted to. And we've been breaking above 110.08, which is this high, 110.17, which is this area here. So that area now, if we're going to continue up long term, needs to become support. So it's 110.17 down to 110.08. If we don't hold that area on any pullback, then we could end up reversing because we are very high up. That is the December high, like I was talking about this December low on the dollar index. All right, so just be aware of its position at the moment. It's overextended. If I think I wanted to be a buyer, I would get into this area to look for my longs. Now there's a 79% level here at 110.23 that we're obviously above from this range, but depending on what side of the market you're on, there's always two sides of the market. You could be bullish, so you could be looking at 110.17 to 110.8 to be a buyer. But if you're a bear, you could be thinking, well, if we start to want to move back below the 79% level here, I could be then starting to think about if we, can't hold this area, I'm looking for a short. But at the moment, let's just move to the weekly chart. We're just coming up, as I showed you with the fib tool for the target of the upward move at the moment. There is this weekly high over here, which we moved above. Folks broke back below. We folks broke it here. So twice we challenged that high and haven't been able to continue the move on for weeks and not, and not folks break. So it's a clear area. It's 110.95, which pretty much, anything above 111 at the moment is very difficult. So whilst we're in an uptrend, you need to understand that. All right, to the 4-hour chart. So we're just pausing for a few candles here. Very aware of this imbalance over here. We actually filled an imbalance last week here when we pulled back, but we haven't filled this one. So what I'm thinking is, if we do this week, if we come up to say 110.95, 1 or 111, there's 300 pips. This is about 108. down here. If we were to come back and fill this as 300 pips from here to here, if we're going to fill this imbalance, imbalances are often filled. So I'm just watching. I know we're very high, but it all depends what your philosophy is. At the moment, I think up here at 1095 to 111 is resistance, and support for the buyers is 117 down to 110.08, maybe down to the figure. All right. Those are the two kind of boundaries I would be looking at depending on what side of the market you're on. Now, prices have to get up to 109, 110.95. It could fail to shorter there. All right, so those are my two areas. I don't really. I can get hold of that box. I might just leave the boxes in for now. All right. 15 minutes. 15 minutes very choppy. What I'm noticing, it's still quite strong because this is Tuesday, Monday, Friday. We got above the central pivot point here. Most of the day was above the central pivot on Friday. Couldn't get down to central pivot point yesterday, and we're not getting down to it today. So we're still very strong intraday price action at the moment. So I don't want to buy up here. It's too high up, but I'm not seeing a reason to sell at the moment. So I've got my levels where I can start to watch for something to happen. If I got a significant rejection today up at 110.95, that would catch my interest. Just where it is at the moment, it's a little bit short. All right, and it's still showing a little bit of a bid because it's not getting down to the central pivot point. It's created a bit of a gap between that price point there at the moment. So I'm just monitoring to see what's happening. Yen pairs at the moment for me, I feel like I said this last week, just from this is in the same commentary. I said it last week, and I'm going to say the same thing. So I was going to say it once. It applies to all the yen pairs. Is just from the monthly chart. We're rejecting the 79% retracement. The monthly chart, even though we've had a massive sell-off, weekly day charts, the monthly trend hasn't changed. Still higher bottom, higher top, and we're rejecting the 79% levels. At the moment, it's kind of trapped between some area of support and resistance in here at the moment. And, I think buyers and sellers are fighting out which way are we moving. Are we going to continue down, or are we going to reclaim all that loss that we've just made? And it's a little bit choppy. All right. Well, I'm noticing, even though the weekly trend is down, current trading this week, we had a bullish candle last week. So would that mean we're going to have another bullish candle this week? What I'm noticing on this pair is the range of last week, which is that candle low there up to that candle high there. And then I'm just going to move to the 1 hour chart. We had a big sell-off yesterday down to the 79% level. There was all this support over here from last week, all lined up. To me, this looks very much like potentially the weekly low to now move up to challenge the high, heading towards the 127 extension of the range at 164.98. Now, it's not easy going. And of course, you want to see a setup that you like. But to me, it maybe is doing that kind of price action. So, today we folks broke the central pivot point. We're holding here at the moment. So if you see a reversal back up from the central pivot point, I'm just going to draw a bit of a trend line in here. There's a bit of a triangle here. If you break north out that triangle, it's a little bit suggestive of, okay, we're going to continue up. And there's also a little range here, just being short of the 79% level. So we could dip down to that 79% level, 162 today for support. Maybe we haven't quite finished the movement down there, but this area offers support today, and you see a setup is proving that price wants to move up from that area. I got a sense that maybe we're going to have a week up. maybe on these yen pairs this week. I know the dollar yen's had a week down this week already, but it could still have a week up by the end of the week. All right, a bit of support coming maybe in there at the moment. But of course, you need a clear trigger. All right, euro pound. Movement last week. Well, that wasn't last week, but this was last week. Came up to down, almost at the 127 extension now of that current move. So we'd want to see a rally back up now within this range. Let's just tidy things off. Don't really need that in there anymore. All right, I would look to this area now, 62.79% of that range. So 85.59 to 85.74. In that area, I'd look for failure for the next move down. So now if we don't rally and price moves down, just keep dragging the fib down. But at the moment, I would look for that kind of price action. All right. Pound dollar at a very major level is in an uptrend, I know. It's at a previous failure level. I'm just going to take that off at the moment. So if we go to the weekly chart, that level there is at 130. I'm just using 129.95, I think, because it's coming from this high over this candle high here, 129.95 is, well, we false broke above this level. So we went up, reversed, this candle just came up to hit that level or a fraction short. So I'm using that as a reference point because on the day chart, it is, just going to squash this in. It's that high just there, 129.95. Where are we today? As I talk, 129.94.95. So we can all see what the day trend is. It is up. But when we came up here very, very strong, everybody probably thought we're coming up to challenge 31.42. Did trade above. Wait, held on that candle. Right, held on that candle, traded through, and then back down to support. So we're back to the same spot now. So it is very strong. We know all pairs to the US dollar moving up at the moment. But if we get a reversal candle today, we don't have to do anything today. Although you could get, very creative if you wanted to. Or you could just short, you could just short right now. If you thought, okay, it failed there last time, so is it going to fail there again? You could just short there with a 100 pip stop, or you could wait for a tight entry on a lower time frame. Or you could just simply wait to see if it gives you a day chart signal like a reversal candle today. First of all, before you start to go, okay, I've got a high time frame kind of signal now that maybe we're going to put the brakes on here. And then I can look for reversal. All right, so at the moment, I know this isn't a trend. There is a profit-taking point at the moment using the fib tool. So we've got a very small pullback within this range. However, from the profit-taking point of view of the fib tool, we're at the 162. So it's very, that is very expensive. It can keep going, but in terms of buying, you should have bought by now. This is where you should be taking profits at a very logical level. And, do you see a signal to get short? Because it is a shorting level. So for our chart, not seeing anything yet, but a reversal here could just be this 4-hour candle finishing negative. Let's just assume that candle's just finished. And it's closed below 129.95. A break of that candle, stop above the high, could be the signal to get short at a key level of resistance, right? Or you wait for a daily candle reversal. You could be waiting for, does this break this low here, then rally back up? Does it form a lower top? Or you preempt the fact that it's going to form a lower top. We could get a little left shoulder, head right shoulder coming in here this week. All right. But ask yourself, is that the level you want to buy at? Now, you might need more information to sell, but I don't think it's the level you want to buy at. If you are long, it's a great level to take profits at the moment. All right. So just what I'm trying to get across is an appreciation of where the market's positioned at the moment. Now, of course, this could just have another 5 days straight up and take out this high and continue the bull market. But for me, if I go back to the day chart, if I wanted to get long, I'd want to see, I'm just going to draw some theoretical candle. I'd want to see at least a day down, maybe a pullback to some area of support. This area here. And then, look to get in a bought position after a pullback away from resistance. All right. So two sides of the market. I think we're at resistance at the moment. So let's just have a look at the 15-minute. 15-minute. In terms of swings, it's still an uptrend here. So if we get a swing point break, that in itself could be enough. To get long early in the day, all you needed to do was to buy on the break of that swing point, stop below here. So at some point in the day, you may get the inverse of that form to get short. We don't have it yet, but you may well have it later in the day. And later in the day as well, if this was to come back down to the central pivot point here and hold, so if that was to come back down to here, and one small hold, if you got price action looking like this, where you get the swing point break back to the upside, that's another opportunity to get long. That was a great trigger to get long because there was limited risk. Even though we're very high up, it was limited risk to see as to whether we're going to break above the 30 level. And it did move up. Your risk here was about no more than 15 pips. Traded up 30, so it was 1 to 2 where it actually topped at. But it was a good entry to see if we could clearly break strongly above 130. Now, of course, we haven't, but you would have been able to get the risk out, maybe lock something in. And at the end of the day, it would have been no harm, no foul. All right, pound yen. So like the euro yen, it's false breaking the 79% level on the monthly chart, but trend remains up. All right. And there's a weekly level here that we've moved back above. Yes, we traded back below it this week, but we're back above it. So can we start to maybe hold above 189.98 here? Can we be moving up to 193.52, the next level of resistance? So at the moment, if we have a day up tomorrow, that's the higher bottom. Okay. I'm thinking, and if you just look at price action here, see that candle's low? It got support at 79%. After moving up, it came down to 79%. What's happening today? Came down to the 62%. So are we now moving up to the 50%? To the 4 hour, just want to look at the range of last week. So it starts here. These red lines are my high and low of the week, last week's candle. And you'll see that we've traded down almost to the 79% level. It's very similar on the 1 hour chart to the euro yen. There was all this support formed last week. All right. Where did we come down to yesterday? Even though it was looking very negative yesterday, it only came to the area of support that got formed just in the 62 to 79% area of last week's range. And we could be moving up to the 127 extension of that range this week. And that does overlap with that weekly resistance level at 193.52. All right. 4-hour trend here is higher bottom. That's the higher top to the previous little area because we came up to there, down, up. So there's been a swing up, pull back outside candle back to the upside. It is just starting to show you a little uptrend there. 15. So it looks like the euro yen. So this is the same range that I drew on the euro yen. I might want to come into the 79 area. I would much prefer this to come back down to 190, 189.85, the 79% level. It is holding at the central pivot point at the moment. So you could look to the trend line break to the upside, like I was showing in the euro yen. Might want to come down lower first. But I think that's an upward move. This is corrective, or we're going to again then move upwards from this area. What's your trigger? Okay. All right, Aussie yen. If we need to look, just to prove the point, monthly chart, massive rejection at 79% fib. We're just struggling with all these monthly tops here at the moment. So we had a week up last week. Well, we have another week up this week. I actually got short last week at 97.66. It all was looking good, and then some US news came out, and it wasn't looking good after that. But that's trading now. But having finished on a positive week, we traded down yesterday within the range, like I was showing on the other pairs. For our range, last week's weekly range, which is on the 4-hour chart here, and went up to there. We are struggling at last week's high at the moment, but to the 1-hour chart, this was a dip down yesterday into the 62.79% zone. Look where all the support is. Can you see why we got support there yesterday? All right. So I think we may put in the low of the week, and we're going to be searching for the 127 extension of that range, which is up at 99.64. Yeah, bit difficult to look at it on the 4-hour chart because these ranges are very narrow. All right, so I just want to go back to the day chart. We've got a level of resistance here at 99.20. Don't necessarily like this pair too much. It's very tight in here, struggling at last week's high. And then we got this area of resistance at 99.20. So it would be much better to be able to buy a dip. So 1-hour chart. So we've had this move up here. Overall move up there. You could just monitor to see if we trade back down to 97.66, which is in between the 62 to 79% area of this range. 97.66 is a previous monthly high to the left. Where last week we were holding here once, twice, 3, 4, 5 times. That's why I got short there. But then the US news blew it above. So we may well find this week that this area here, now that we're above it, becomes support. If we dip down, I would watch for sure 97.66 to be support. Now that we false broke it yesterday. All right. I wouldn't be getting involved up here at last week's high because the market hates last week's high. Yes, it's just holding an uptrend here, but for me, price doesn't like it up there. So why would I want to buy in an area where price isn't really showing any conviction to move above. I'd want to buy a dip. So it's going to be a patience on that at the moment. So I might just leave that like so. Aussie, got support at 6714 today. If you've got your support and resistance all drawn in, then you'll understand where that's coming from. So to the day chart, we've had a massive rally from 63.62. Still a rally until we convincingly move above this high here at 67.98. So on the weekly chart, there's the potential for, and I said when we put this, before we put this high in here on the Aussie, I said watch this area over here. So this area here is the top of the range. Of course, this area here is the bottom of the range. So until we get a clear break above or a clear break below, this isn't a range. That is the range. I know it's all screaming up at the moment, but if we, I don't know if we can get to the top of range yet. It's got this area here where it's traded above at the moment, and that high there is 67.14. That's been intraday support today, this area here. So if you're good at drawing in support and resistance, that's why the market's got support there. It's that old high. But be very aware that we're in a range. And I actually thought we were going to break below here, but we didn't. So I could be bullish and thinking we're going to break above here, but it doesn't have to either. It could just remain in this range. Don't forget where the interest rate differential is. Even though the US are going to cut potentially, they are still way above the interest rate, the interest rate of Aussie. All right, to the day chart. So at the moment, we're above the 79% level of the range. But what the market has been doing is there were a number of imbalances that got formed on this move down. So this has been coming up to fill all the imbalances on this day chart. The last one was in here on the daily. That's got filled. All right. Two very positive days, and then we're into today, which is a smaller day at the moment. Now, if we get a reversal candle up here today, or we close back below 67.14, 67.04, wouldn't that then be suggestive that we could be left shoulder, head, right shoulder? I know that's fractionally higher, but the market's been very excited about the death of the US dollar, which, we could turn around as fast as that's turned up here. This could turn around as fast to move back down. You saw how quick it moved down here. All right. So I'm doing nothing at the moment. I'm not going to, we're at the top of the range here. So I'm not going to buy at the top of the range. I needed to get long down here. Now there was a little mini double bottom that formed here. All right. So if you do the price projection for the double bottom, you'll see that we are just above the 200 level. So this is way overextended in terms of this little double bottom. That's the price target. If we've surpassed the price target, this is way overstretched. It is not where you want to buy, even though there was an intraday buy on the pullback to 67.14. So just look at the 4-hour chart. There was the pullback on the 4-hour. And there it was on the 15. All right. Now it may come down, if you're bullish and you think we're going to blow through 6,800, then, and you're not already got long today at 67.14, this is the buy area as long as the buy area holds. Okay. you'd be buying above the 79% level. But this could hold. We could be moving through 68 if you're on the bullish side. So that this is the idea of buying a dip. That's scenario one. Scenario two is you're looking for this area to break back to the downside. All right, over the next couple of trading days. Then you're looking for 6,700 to maybe 6,704 or even back up to 6,714 to move down, depending on what side of the market you're on. Now, of course, for all the other, if you're thinking of getting short a pair to the US dollar, you want to see all the US dollar correlate pairs all wanting to move down. If you're trying to short this and all the other pairs to the US dollar moving up, you're going to be wrong. And, same with any other pair that you're looking at if you're trying to short it. So I would definitely make sure that everything is doing the same thing. All right. So at the moment, it's still bullish. It's maybe putting the brakes on no today. That candle is nowhere near the size of these last two at the moment. Of course, it's still got half a day to go, but now further up, 67, 61 was the area we kind of false broke to get up to 68 almost. So we could, stall at 67, 61. On the 4-hour chart, I don't think there's really any, just looking at the imbalances. The last imbalance was here, which you can see we've come into fill. So looks like all the imbalances are done. So once the imbalances are done, don't be surprised to see price turn around because there will be some imbalances now on the downside. There's one in here. There's one there. One in there. And there's one in here as well. All right, so if we start to see a turnaround, then there's a possibility of price coming back to fill these imbalances. All right. Okay, New Zealand yen. Go to the monthly chart. You'll see that 79% rejection, like all the other pairs on the monthly chart. Trend is up. Yes, the weekly chart trend is down, but we've had one to the third positive week. We're going to hold another positive week. Just at the moment, it's headbutting this broken weekly support. I mean, the weekly trend is down. It could hold there for sure. I want to start to make its next decline. But there's a number of imbalances here to fill on this weekly chart. One here, one up here, in fact, another one up there. Plenty of imbalances on the day chart to fill. So at the moment, 88.16, which is an area of potential resistance as we're moving back up from over here, has become support this week. You see yesterday's dip and Thursday's candle and Wednesday's candle will get support down at 88.16. And we're into resistance. So really, to engage, you either need to see a dip now on the 4-hour chart of this range, back down to 62.79% area, 88.99 to 88.65. So move down. I wouldn't want to be trying to buy into where price is because you're buying into resistance. That's one option then. So you're looking for a dip. To see if we can continue the uptrend that's going on there on the daily 4-hour charts. Or you're looking for clear break of 89.94. Now, if you're exceptionally bullish, you think it's going to end here at 89.94. Of course, you could be looking. You can see that we've been having failure. We broke above. Big snap back below. We could be failing here. You could be looking for a short here. It's a prime level to short at. If you think that this uptrend that we're seeing is short-lived and I just want to get short, well, that's as good enough shorting level as you're going to find. I think, though, what you might want to see is a little bit more of a, for it to tip its hand on the 4-hour chart, first of all, but it is a potential level that we could fail at. But what I'd like to see is if we're going to continue up, we want to move through here, first of all, and then look for 89.94 to be support. All right, we don't have that yet. That would be the safe option because we do have this, we have this old area of support here. Became resistance at that level. So 89.94 from way back offered support, became resistance. We're hitting it with our head at the moment. If we want to get long, you want to see a break above to become support. All right, so that's, that's telling you why it's potentially a selling level with this previous proof to the left. Okay, so that's the level to watch at the moment. 89.94, is it resistance to sell down from, or we're going to see a break above it to become support? New Zealand dollar, been moving up. Very much like the Aussie dollar. On the weekly, we have the range. Okay, we're actually coming into a weekly high here at the moment as well. So 61.53, if we get there, could be where we hold in reverse. We're right, pretty much getting at the 79% level as well. And on the daily charts, and that's the weekly high. There's a daily high here. So 61.34, 61.53 is an area of resistance at the moment. It's not where I want to buy. Doesn't mean to say we can't move through it. But what are we at? Tuesday, Monday, Friday, when we started to show support on that broken high here, was where you wanted to buy if you wanted to get long. This is not where you should be buying, right? Because we're now at resistance. So if you did buy down there, great level to take profit, or you're holding to see if we can break through this area at the moment. Now, if we get a rejection candle today, then of course that might be a signal that, okay, the market's at the top of the range. We can all see this period here where we consolidated and came up to test the top of the range. This is a whole bunch of consolidation. Now, what you might find, we won't know until price does its thing, but in this area, there was buyers and, because it's consolidation, buyers and sellers are fighting it out to win market direction. What happened previously over here? More consolidation here. All right, consolidation went south. Consolidation went south. So if we start to consolidate, the other thing I wanted to say was, in these areas of consolidation, there's buyers and sellers, okay? Now, if prices moved down and you were a buyer and you didn't do anything, and you just held your position, so if you were buying in here thinking we're going strongly north, and then we didn't, but I don't know, you were too stupid not to get out of your bought position, what are you going to do when it comes back into that area again? You're going to get, if you've become wiser since the last time price was there, wouldn't you just get out of your position? So to do that, you're going to have to sell. So don't be surprised to see this put its brakes on here, because it's back to the area of consolidation where the market fights. Don't be surprised to see, if we started to consolidate here again, wouldn't be any surprise. Now, depending on your viewpoint, you could be thinking, okay, I actually thought we were going to break down through here, but we didn't. But we've had this rally up here, like on the Aussie. We did cut interest rates last week. I thought that was that day there. I thought we'd actually failed there, but we've continued up down to 79% level. 79% level could simply be where this tops. If we get rejection here, we get a day chart candle rejection, or we get a 4-hour candle rejection if you're looking at a lower time frame, that could be the start of a signal to say, okay, we're having a 79% rally to come back down to retest here. Can we move down and through? Because what we've done is we equal tops. The Bank of New Zealand has said that we're pretty much, I think, back in range now from inflation. In terms of inflation, it's under control, it's back in range, and they thought about cutting interest rates by 50 basis points last week. So in my mind, then they're just going to be cutting every time they have a interest rate decision now, aren't they? Getting back to normal. So does that really lead to the idea that we'd be flowing through these highs? If we're maybe cutting more aggressively than the US side, because the interest rates, until interest rates got cut on the New Zealand side, interest rates were even Steven between the US and New Zealand. So it is maybe lending the idea that the US would lead to a higher interest rate than the New Zealand, which would potentially lead to a lower New Zealand dollar to the US dollar. So I would focus on this area to see if we start to top. But of course, if we don't put the brakes on here, the next major level is up there at 62.17. Don't think the 4-hour chart is showing you any reversal yet. You can see it's moving into that area. So the big question will be, what happens here? Does it hold to move and reverse? Dollar Canadian is exactly the upside down at the moment of what we're seeing on the pairs to the US dollar. From a weekly chart, this folks broke all these weekly highs. Now we've got CPI coming out later in the day. We have been cutting interest rates on the Canadian side. But of course, we are coming straight back down into double bottom supports. Double bottom support here. That's 136.06. I think I've got a top in here from the day chart there. There's an area here as well. But there's a whole band of old tops over here to the left. There's a whole band of old bottoms here to the left. And we are right on top of the top line here at the moment. Okay. 136.40. I'm trading at 136.13-ish. So, over the next 24 hours, if we reject this area, I got long here on this rejection last time. All right, I took it off right about here. Didn't trade all the way up to the top, but I took it off around this top. So this is definitely, until proven different, this is support. So you could wait to see if it traded down to 135.88. If you know the 100 pip trade entry, you could be buying there with a 100 pip stop below. If you need to watch for some convincing action that price is going to hold, then wait for the day chart to close. What does it show you? See that day chart candle there? That was a reversal candle. After that, if you bought, up she went. So do we get a reversal candle in this area? Or after today's inflation data, do we get a 4-hour candle reversal down here? Back to the upside. All right, so whatever it is that you need to see a reversal, first of all. But of course, we're on support at the moment. Right now, you might be short, fingers crossed, waiting for support to break, and that's all good. But it's not where you want to get short. You needed to be short further up, okay? So what we're definitely seeing with the pairs that have US dollar in it, this is the inverse of most of the quotes. Pairs to the US dollar were at very high levels, getting back towards, the December high area. All right. December high, so the December low for this pair, though, is all the way down here. So this is way, way stronger than some of the other pairs that are inverse to this, because this is miles away from December's inflection point, okay? Right, so the big question now in the dollar Canadian over the next couple of days is this support? Dollar franc, just turn back to down on the daily. The weekly is down. It failed at weekly resistance, so we're coming down to this support level. Now, of course, this support level, though, we obviously rejected last time. So we could hold at 85.52. So if you're getting short, you don't want to be selling into that level. You need to understand what that level means. I would like to see a rally on. If I wanted to get short this pair, I would draw a fib like so. And I would monitor to see if price comes up to the 62.79% area now. Could form, if price didn't move any further down, I wouldn't have to adjust my fib. And then it could form up here a little head and shoulder pattern. All right, so if price keeps moving down, keep dragging the fib down, but I would want to see a rally to sell. We don't have that yet. It's just changing the trend by putting in the lower bottom, but then we want to see it come up from a lower top. And then you can sell above, way above this area of weekly supports, and then can it break down through there and continue the trend down? So it needs to do some things before I could get too excited about that pair, but that's what I would look for on dollar franc. Dollar yen. Now we have had a week down. So the other yen pairs haven't had a week down, but this has had a week down, start of the week. All right, so yesterday, this is my 50-minute chart, but this dashed line here is last week's low. So we moved below last week's low, but then we've been getting support on last week's low. Here's last week's low. Came back above, support today. So some support coming in there as well. 146.47, which is pretty much where we're at right now, is weekly support. I discussed that level before about watching it to be support. See, it was support through these days. Yeah. Tuesday, Monday, Wednesday here. I said on Tuesday, watch for 146.49 to be support. It traded below, snapped straight back above. See, yesterday it went below, closed above. So if we get another close above there today, that's very suggestive. If we go to the weekly chart, here it is. That's very suggestive that, the monthly chart here, rejecting the 79% level, as is all yen pairs. Are we getting support on weekly support? We could be putting in a higher bottom here on the weekly chart if we close back above here this week. We get a strong close this week above this level, we're putting in a higher bottom to move back up the range. All right. So watch the daily candle. Today I think I will just be watching where does the daily chart finish? Can it close above 146.47? If it can, I would monitor 146.47 then through the week to see if it revisits and offers you a level to buy from. Now, you could buy there now. You could be aggressive now and say, okay, well, I think that's the case. You could be buying here. You could go stop below here or stop below yesterday's low. And you're fishing for support here to move back up the range. All right. or just to the day chart. I want to go back to the day chart. There's two sides of the market. If we negatively close below there today, then you could watch 146.47 to be resistance this week to trade down from. At the moment, it is a little bit suggestive that maybe it's more support than resistance at the moment, but because we couldn't close below it yesterday. Look at all these candles. Once we closed above it once here, we've not closed below it since. So even though we've had 2 negative days down here, that is where the buyers are prepared to be buying at the moment. So whatever kind of price structure you want to see or price pattern you want to see around this area to say, okay, yeah, it's getting support, start to watch for that. Putting in on the 4-hour chart here, came up to the top of that candle, then it came down, back up to that candle. So it's putting in a bottom there on the 4-hour chart. Then it's come down like so. All right, so we look at that on the 15-minute chart. It looks like it's come down to 79% area. Is it, if it was to come, it hasn't actually quite got there. So it got down to 146.16 to 146.00. Retested last week's low and held once more. Is that a buying area to move up? All right, so quickly finish on gold. Breaking above the all-time highs at the moment. Yesterday's daily candle couldn't quite get down to the all-time high that was 2483.64, but that would be clear support. Difficult to be buying at the top of the move. I would, want to look at this area to be support in a perfect world, but maybe price doesn't want to get down there anymore because it got down there yesterday. So draw a fib across that range and, look at the 62.79% area over there. So 2,500 down to 24.94 for a buying area. So a clear uptrend there on gold. Now it's broken above the all-time high. But you don't want to be buying at the high, do you? You want to be looking for a dip. So look for a suitable dip as and when. All right, that's my thoughts on gold. All right, everybody, I'm going to wrap it up there. We've just gone just over 8. That's fine. Lots to consider this week on the charts. So hopefully that gave you a good appraisal of what's going on. Just want to see what the euro is doing. Not able to really embark up at 109.95, 110.95. Pound just holding around 130. Okay. All right, let's wrap it up there. If you want to join me tomorrow for a webinar, head over to the webinar page. There's links there at the top. And tomorrow I'll be going through order blocks, part 2 of the smart money concepts. At 7 p.m. Sydney time, just register your interest if you want to join me. I look forward to seeing you there. Okay. Steve, thanks. Yep, as you say, the market's asking many questions. We've got a clear downtrend on that US dollar, but it is getting very much down into an area of support. So, yes. We'll have to wait and see what the week brings. Are we going to see a considerable long-term sell-off now of the US dollar, or are we getting close to the bottom? We'll have to wait and see what the charts tell us. All right, everybody. Thanks. Look forward to seeing you next time.